So last video I was talking about alternative investments outside of the fiat money system, and I was discussing Bitcoin. And if you go on to Yahoo Finance, you can get a pretty good chart of Bitcoin going back to 2015. And even though it's been extremely volatile, it has surprisingly been the best investment compared to anything over the last 10 years or so. And I think at the beginning, back around 2011, something like that, one of the first transactions with Bitcoin was to buy 2 pizzas, and that took 10,000 Bitcoins to do that. So it was like fractions of a cent per share. We've gone up to a peak, which was a bit of a bubble in 2018, where it was about $18,000 US at the time, and it's kind of went from there down to 3,000 up to 11, and then just recently with the market correction, it went down to about 5,000. But if you look at the long-term chart and you look at the major dips, the next one is always higher than the previous one. So even if you just kind of buy and hold, it's turned out to be a good investment. And if you want to trade it, there's some kind of excellent opportunities, especially after a big move, especially in 2018. Unfortunately, I did start buying in. I was buying Bitcoin at 2,000, and through Coinbase in the States, it was the biggest one at the time. And then, unfortunately, I wanted to be able to trade a little bit easier in Canada, be able to transfer money from my bank account, and then selling Bitcoin and moving the money back to my bank account. So I moved some money to Quadriga, and that company, the founder went to India, ended up being murdered. Supposedly the keys were lost, and then Quadriga basically failed. So I actually ended up losing, I think, 1 or 2 Bitcoins there. And I got a little bit deterred, but then again, with all this money printing and everything else, I decided to reopen my Coinbase account, and I still had some Bitcoin in there, and I've started to add to it pretty much on a weekly basis. So I did a little. I actually read a very good book I would recommend. It's called the Bitcoin Standard, and it goes through all the currencies used over the last 1,000 or so years, from seashells that were used to some civilization that used a certain type of stone, into the Greek area, Greek and area where they started using metals, then silver, the fall of Rome, where the coins they started to use less of the silver, that type of thing, all the way up. And over that time, gold has been one that's been stable, and I'll get to one of the reasons for that. But I thought I decided to kind of look at where Bitcoin is now in relationship to other assets, as far as the type of money. So, for example, the M1 money supply in the States, which is just US dollars, and anything that can be converted in a very short time to US dollars, that's 4.7 trillion. And the M2 money supply, which is a little bit broader, that's 16 trillion. So roughly today, Bitcoin is worth 221 billion. Just taking the price, multiplying it by the number of Bitcoins outstanding, which I think is around 19 million. The number of Bitcoins that will ever be produced will be 21 million, but they'll be produced at a diminishing rate. So it'll take, I think, till 2140 before the last Bitcoin is made, and I'll get back to that. So I thought I'd also then look at how much is the gold around the world actually worth today, and it turns out there's probably different numbers for this, but I got there's 191,000 US tons of gold that's been produced over the last, I don't know, 1,000 years or so. And to give perspective of that, that could all fit quite easily under the Eiffel Tower. So and then the value of all that, at roughly $1,700 an ounce for gold, is $8.9 trillion. So if you say Bitcoin has the possibility to become as common as gold and have the same valuation, then if you take the number of Bitcoins to be produced and equivalent to 8.9 trillion, then a Bitcoin would have to increase to $487,000, or roughly $500,000 per Bitcoin. Now, I've heard lots of these numbers before, even $1 million of Bitcoin, $100,000 was meant to hit $100,000 this year for Bitcoin, so on and so forth. But I just, from my own personal, kind of give it some perspective. So, I mean, there is that possibility. And one thing I thought that was kind of interesting is that when the stimulus checks went out in the States for $1,200, there was a stat that came up, and there was a spike in the number of Bitcoins being bought for exactly $1,200. So there was people that were actually taking the money from the government and using that to buy Bitcoins. And I've heard too now a lot of larger investors being scared now of the money being printed. As I've mentioned, $6 trillion in like a month, that they're getting scared of inflation or debasement of pretty much all global currencies, because they're all valued one next to another. So we start to see a lot of hedge funds, other people with wealth, starting to use Bitcoin as a hedge. And we've seen that just over the last few months where it hit the bottom. So March around 14th, it was down around 5,000, and today we're up to 9,300. So in that time, it's almost doubled. And I think a lot of this is the bigger investors coming in and getting some diversification in their portfolio. Also, around May the 12th, there's something that happens to Bitcoin every 4 years, is that the number of Bitcoin gets reduced by half. So I think right now there's 12.5 Bitcoins in a block that I think it's roughly every 10 minutes put onto the blockchain, and that's going to be reduced to 6.25. So that means and then when I was getting back to gold, the reason gold has value is because it's rare. And here we have Bitcoin now almost being rarer than gold, because the amount being produced is actually going to decrease in time and then finally stop at the 21 million coins. So, and from this book I can show, no, I just lost it. Yeah, here we go. So, bring that over to here. Let me see, one of the reasons gold has held its value is that this gray line here is total gold stockpiles around the world, and I said that's from the 1900s till now. We're basically up to that 190,000 tons that I said, and the production of gold has stayed steady at about 2 to 3% a year. So there's an actual term for that I hadn't heard till I read this book, but it's also called the stock to flow ratio. So I'll just kind of read this here, which I found kind of interesting. We can understand money hardness through the understanding of two distinct quantities related to the supply of a good. The stock, which is an existing supply consisting of everything that has been produced in the past, minus everything that has been consumed or destroyed. The flow, which is the extra production that will be made in the next time period. The ratio between the stock and the flow is a reliable indicator of the good's hardness as money and how well it is suited to playing a monetary role. A good that has a low ratio stock to flow is one whose existing supply can be increased drastically if people start using it as a store of value. Such a good would be unlikely to make value if chosen as a store of value. The higher the ratio of the stock to flow, the more likely a good